what's going on in real estate? Good question. Let's find out what's going on in real estate. I am Justin Miller with the Chung Miller Group. At the Chung Miller Group, we help people build wealth through real estate. We help people buy and sell homes. Okay, so before I dive into the numbers of what actually happened in July, let me just introduce, this is the August 2026 Real Estate Market Update video. I produce these videos every month. I pull the data on the 7th of the month so that they're comparable across the time series. And so that's the data that we're going to be looking at, is July data that was pulled on the 7th of the month of August. Now, I always start these videos with a little bit of macro insight so that we can contextualize the numbers, what's going on in the real estate market with what's going on in the broader economy, because the broader economy has a significant influence on what's actually happening with housing prices, with housing demand, with housing supply. So let's dig into the macro issues. First, I will comment that actually this morning, since I'm recording this on the 7th of August, this morning we got the July 2026 unemployment and employment numbers released by the Department of Labor. The numbers are not particularly good. So headline number, unemployment came down to 4.1%. That sounds great, but that's the headline number. That is actually calculated separately from the employment numbers. It's also calculated based on the size of the labor force. And so labor force participation came down. What that means is people left the labor force. That's different than becoming unemployed. That's they've given up on looking for work, or they've become retired, or they've decided to go back to school full time. So that reduces the size of the labor force and reduces the participation rate within the labor force, allowing the unemployment rate to come down. But the employment numbers are where we actually see whether or not the labor market is healthy and how it's trending. So what did the employment numbers look like? Well, the July employment, while we were expecting to see about 80,000 new jobs added in July, we actually had a loss of 23,000. So we came in 100,000 below the estimates. We had an actual loss. This is the first job loss report that we've had in quite a long time. I will also comment the June numbers were just subject to significant revision down. They were revised down by over 30,000 jobs to show a June gain of only 20,000. Now, this is really interesting because we also had last month a significant revision down in the April and in the May numbers. And you'll recall in the previous two videos, I've been commenting that the Labor Department had, under pressure from the Trump administration, significantly shown significant increases in the number of people who were getting new jobs. And I'd suggested those numbers looked really suspicious. They seemed to be politically manipulated. Well, we've now given back in April and in May and in June close to 150,000 jobs, right? And we lost in July actually 23,000 jobs. So the labor market is not particularly strong. Now, these are national numbers. This is not what's going on in Las Vegas. But I will point out in Las Vegas, tourism, which drives a significant portion of our economy here, we were seeing tourism come down in 2024 because of pricing issues. We saw tourism coming down in 2025 because of tariff-related and tourism-related decisions about not wanting to come into the U.S. And so that was pulling down our tourism numbers here in Las Vegas. Well, our 2026 numbers have been down from 2025. So we have, in the largest portion of our economy, we're now suffering through more than 2 years of reduced tourism levels. Now, that doesn't mean the economy here is collapsing. That's definitely not what I'm saying. But I am saying the largest employer, the largest revenue grower for the economy, we're still seeing significant challenges in Las Vegas. And then when you look at the national employment numbers, well, people who are unemployed typically don't come to Las Vegas to spend their tourism dollars, right? They may stay home, they may eat out less, etc. And so that's a headwind on further tourism spending here in Las Vegas. So that is a negative for the regional economy, irrespective of employment levels that are actually existing here in Las Vegas. And of course, negatives for the regional economy mean negatives for the local housing market. Okay, so what about inflation? We've been talking about inflation for, it seems, a really long time. Well, inflation reports for July came down, but they're still elevated 150% above the Federal Reserve's target for inflation. At the end of July, the Federal Reserve, the FOMC, the Federal Open Market Committee meeting, where they set the Fed funds policy rate, interest rate, they made a decision to hold that rate steady. Really interestingly, the bond market did not like that answer. And so bond prices have been going down, being sold off, which means bond interest rates have been going up since the Fed had that meeting. And that means also mortgage rates have been going up. And so we saw at the end of July, mortgage interest rates in the 6.75%. We were above 6.5% all month, and we're at the upper end of that right now. I will tell you that just today, August 7th, as the unemployment and employment numbers came out, the bond market decided the economy was actually weaker than understood, and that could give the Federal Reserve some room on interest rate policy. And so that caused the 10-year Treasury bond price to increase a little bit, bringing 10-year Treasury rates, the interest rate on the 10-year Treasury, down to 4.6%. Now, that's interesting, but remember the 30-year fixed rate mortgage, generally tied to the 10-year Treasury, has a premium of about 2%. So that means that if we added 4.6 and 2, we've got 6.6%. That suggests that mortgage interest rates may have come down a little bit to 6.6%. That's still really quite high compared to where we've been over the past few years. So mortgage interest rates definitely remain elevated. And that, of course, is a drag on the property market. We also have all the uncertainty around war. We may be at war with Iran, maybe we're not. This seems to vary on a near daily basis, with the worst headlines tending to occur on Friday and the best headlines tending to occur on Monday, suggesting there's actually attempts at market manipulation in the headline statements that are coming out of the Defense Department and the administration itself. Something to watch, but it certainly induces additional uncertainty. So where does that leave then at sort of the summary level, the real estate market? Well, inventory continues falling. We've now seen all submarkets with lower inventory relative to where we were last year. And in fact, we're down on inventory 15 months in a row. If there's nothing for sale, it can't be bought, right? So inventory coming down is a problem. We actually have shortage of inventory. We'll get to that in a couple minutes. New listings, that's what replenishes inventory. New listings are down significantly in all submarkets. That continues to be a trend, meaning inventory is not being replaced as it either expires or is withdrawn or actually goes into contract and becomes sold. And sold levels in 2026, year to date, barely above 2025 levels. And remember, 2025 was the weakest real estate market in terms of transaction volume that we've seen in Las Vegas on a per capita basis since the 1970s. Very slow sales, very slow market, right? So that continues. That's the overall summary trend line of what we're seeing in the market. The real estate market in Las Vegas continues to be unhealthy. Low inventory, low sales volume, high costs of transactions, and we'll also see high failure rates on contracts that are entered into. Okay, so let's turn our attention now to the actual specific numbers for what was going on in July. Great, and these numbers they're all interesting. They're all current as of the 7th of August. Single family resale, we always start with pricing. So single family resale, median sold price, $470,000. Now, last month in June, we had gotten to $480,000. And in fact, I commented that was the highest resale median sold price that we've seen in the Las Vegas Valley in history. And it suggested that with the weak transaction volume, that number is going to float. We're probably not going higher possible, but we'll probably come down a little bit and continue to be range bound. And that's exactly what happened. So at 470,000, we're 10,000 off the prior month's number, but we're well within the range of sort of 465 to 480 that we've been in now for 2 years. And so we're not seeing prices collapsing or anything like that. Prices are perfectly fine. They're stable. They're within the range that we expect them to be in for single family residential resales. Now, I will just point out for a second, if you happen to get your real estate information from somewhere else, the numbers that are being provided by other people, including the Realtors Association, LVR, they include new construction sales that somehow made it into the MLS. They are not the same population as a resale, and so they are literally dirty data. They cause confusion. They should not be in the data set that's being analyzed. But those numbers fluctuate similarly, but they're also confounded with garbage. So anyhow, the actual number, 470,000. That's down $10,000 or 2.1% from the prior month. Again, range bound, not a worrying, we're seeing prices collapsing, we're going down or whatever. That's not the case. We are actually exactly flat. We're up $500 year over year. So that shows you, again, we're within this actually fairly narrow range, near the top of prices that we've ever achieved in the resale market in the Las Vegas Valley. We're up $500 over the past year on single family median sold price at $470,000. So what about in condos? Condos is a little bit interesting. Now remember, we've been seeing some really significant pressure in the condo market where I had mentioned we've not actually set a pricing range. We've been coming down a little bit on condo pricing every month. So condos have shown less health in terms of pricing, less stability certainly in terms of pricing than single family resale. Well, what happened in July? We actually saw a median condo resale price of $227,500. That's up $7,000 from what the median price was in June. So that's up 3.1%. That's actually really good news in the condo market. It is down 4.2% year over year. So that's noteworthy. Remember, condos have been fluctuating, smaller market, greater fluctuations, and we've not been putting in a floor on pricing. So that what we've seen in July is encouraging. It's not a trend, it's a single data point. So we'll see how that holds going forward, but it's potentially encouraging news. Townhomes down $1,000 or 0.3% from June in July to $331,500. So that's holding within the range. It's down 3.9% year over year. Remember, the townhomes actually have been stronger through pricing. Have actually been stronger through much of 2026 than what we had seen in the other submarkets. So that it's down year over year is not concerning because we are still within that townhome pricing range. Now, pricing insight, and this is consequential, right? Median sold at price per foot came down for single family $2 per foot last month. Now that's actually fairly substantial drop on the price per foot. That suggests that if we look across the whole range of all of the houses that sold, houses that were priced in the lower half of the market were actually transacting a little bit better, a little bit more quickly, a little bit more frequently than those houses in the upper half of the pricing range. So it's interesting news that it could be the upper portion of the market is actually right now feeling stronger effects of slowdown than is the bottom half of the market, the half of the market that's priced at or below median sale price. So something to keep in mind. If we see this becoming a long trend, it's consequential. Right now, it's just a data point that suggests that, hey, this is interesting. In July, pricing below the median, right, not appropriate for every house, but pricing below the median, that part of the market was actually performing a little bit better than that part of the market that's priced above the median. Remember, the sold number is our actual demand number. Nothing sells unless a buyer is there to actually put something into contract and then follow through and actually close on a contract. So a buyer is required for the sale. That means that's our proxy for demand. Okay, so the sold number, not amazing. Single family residential, we actually came down 218 to 1,862 in July. That's down 10.5% from the June number. Now that's weak, right? Not only is it just generally slow, but it's weak relative to June, which is not great. July should be pretty durable, right? We know that in the hottest summer months, we start to see sales coming down, but most of the things that would close in July actually gone into contract in June, right? Because it takes about 30 days to get through the contract. So this suggests that the market in June was not as strong as we had believed, perhaps, and we're seeing that shadow, that impact in the July numbers. And so July, we're down 10.5% from June. That's a pretty substantial drop in the sales transaction volume. We are up 1.4% year over year. So that's good. But remember last year, 2025, last year was the slowest transaction volume that we've seen in Las Vegas since the mid-1970s. If you look at transactions on a per capita basis. And what that means is you take the total number of transactions, you divide it by the population of the valley, and that gives you a particular per capita rate. Now, why would we do that? Well, let's say only one person lived in Las Vegas, right? How many houses would transact in Las Vegas for that one person? Maybe a fraction of one. Let's say that 100 million people lived in Las Vegas. How many houses? Well, we would expect a whole lot bigger number, right? And it's because the size of the housing stock, the number of buyers and the number of sellers, and consequently the number of transactions will scale with the size of the population. So that's why we sometimes want to look at a per capita number. In 2025, really, really bad. So that we're up 1.4% from 2025 levels in single family residential, the largest portion, the 80% portion of the resale market in Las Vegas. Okay, well, at least we're up, right? But nothing to write home about. It's a really weak number. We are below the numbers that we saw in single family resale sold for 2023 and 2024. Okay, so that tells you the market continues to be very slow here in Las Vegas. Now, what about condos, right? A little bit different story. 242, that's up 14. The condo market is obviously much smaller, right? So that's up 14, but it's actually up 6.1% because each condo represents almost 2% of the, almost 0.5% of the market. Okay, so getting 2 more condos, 2.4 more condos sold would increase the rate by 1%. Well, we actually ended up with 14 more, so we're up 6.1% month over month, but we're down 10.0% year over year. And we're below the levels of 2023 and 2024 and 2025. And why do we mention 2023? Well, that had been the slowest market in a generation in Las Vegas. Why do I mention 2024? There had been a slight recovery, 2.4%, I believe was the number, from 2023. So it's still a really bad year. Why do I mention 2025? Lowest sales transaction volumes in 50 years, right? Since the mid 1970s. So those 3 years and 2026 is looking pretty comparable. So condo sales down relative to 23, 24, and 25. Condo sales really, really weak. But we did see condo pricing going up, which is encouraging. That's why I say we may be putting in a floor for condos. We'll know more over the next 2 months. What about townhomes? 238 closed sales on townhomes for the month of July. That's exactly flat month over month, no change from what we saw in June. It is up substantially. It's up 19.6% year over year. So that's really good news. And in fact, in the townhome space, right, which is a small, less than 10% of the overall market, right? So if you take the overall market and you put the townhome portion there, it's less than 10% of all of the transactions that take place. In fact, it's also less than 10% of the built stock of all the properties that exist in Las Vegas. But in that 10% of the market, we're above sales for 2023. We're above sales for 2024. We're above sales for 2025. So we're seeing relative strength in the townhome market vis-a-vis the other submarkets, single family and condos. So something to note, definitely an important thing structurally for the market, but it's a small portion of the market. Sold insight, right? Remember, before something actually closes, it goes into contract. It becomes a pending sale. Escrow is opened, right? So you could call it in escrow, you could call it pending. Pending is down in July vis-a-vis June for single-family homes and for townhomes. That suggests that the August numbers are going to come down for sales for single-family and for townhomes. It's up, but only weekly for condos. Okay, so interesting statistic that's forward-looking. That's why I get that every month. All right. So that's sales, that's the demand side of the market. What about the supply side of the market? Well, let's go ahead and look at that. That's inventory. In July, inventory fell across the entire market, right? So in single family homes, we had 7,483 units for sale. That's resale single family in the Valley. That's down, not much, it's down 35 or 0.5% from where we were in June. But it's down 8.0% year over year. That's a substantial drop. Okay. Well, condos, 1,648, that's down 75 or 4.4% month over month. Interesting, right? Condo inventory came down, and that's happening at the same time that condo sales were going up and condo prices were going up. We were down 4.4% month over month, but we were down a substantial 9.2% year over year. And for townhomes, townhome inventory fell by 17 month over month, down 1.4%. We're down a full 12.1% on townhome inventory year over year. So we've got really, pretty significant decreases in inventory across all three market segments, all three submarkets here in the Las Vegas Valley, taking place in July. And by the way, looking forward, that's a trend that's likely to continue because we start to see new listings taper off in the hottest months of the year. So these declines are a little more than we'd expect seasonally, but we do expect to see new listings come down during the hottest months. And well, August is the other of the hottest months. And so we'll probably see inventory come down again in August. Well, two insights. all segments remain below their year-ago levels for inventory, single-family, condo, and townhome. In fact, we're down 15 months in a row on inventory across the real estate complex. Insight number 2, critically, new listings also dropped in all market segments, right? What that means is fewer newly listed properties were coming into the market to build inventory or to replace inventory that's coming out of the market. Okay, now that's inventory as listed. And you know that I try to give you a bifurcation of what inventory actually is a few times a year, right? And so I've decided to do that here for the August update. I've looked at all of the listed inventory in Las Vegas at the end of July. And I've compared that listed inventory to the actual sold inventory. And specifically, I'm comparing on price, okay? And so it turns out that the median list price at the end of July for properties that are sitting in the multiple listing service waiting to be sold, $554,803. Now that's $84,803 higher than the median sold price, right? So if I told you I've got a house that you could buy for $553,803, you'd be like, oh, whoopee, I know, what's it like? It's like, well, it's exactly the median house. Oh, well, I could get a few median houses, right? If the price is lower than that, why am I going to bother looking at yours? Well, exactly. I've listed it, but it's not actually going to sell. In fact, you're not even going to see it. Even if you were looking through the full list of all the stuff out there, you're going to segment that list and you're not going to see it because it's going to fall outside the filters that you've put into your search parameter. You hire a real estate agent, it's going to fall outside the filters that real estate agent puts into their search on your behalf, right? So there's stuff that's listed, it's fake. Well, it turns out, right, if we normalize the listings so that the median list price is equal to the median sold price, we have inventory of 4,242 single-family homes. So 63% of those properties that are listed are validly listed and sitting in inventory waiting for buyers to actually find, which they can find and be able to make offers on. That's about, well, it's a little bit less than 40% of normal inventory for this time of year. It also means that 37% of all of the listed inventory is fake. It's not findable unless you're just doing a global search. How many are there, right? But that's a worthless search that buyers are not actually going to be doing, right? So 37% of all the listings, they're fake. 63% of the listings are available and potentially subject to being bought. That inventory declining and low and 40%, less than 40% of normal is the actual inventory that we've got in the market that people could actually be going out there and buying. Now, this also tells you a little bit about why the headlines are, price cuts, price cuts, price cuts, right? You could be priced $85,000 too high and you can make a big price cut, and you can make another big price cut, and you can make a third big price cut. You're still priced too high, right? So saying that there are price cuts on inventory is interesting, but only in the, there's price cuts on inventory interest level, right? It doesn't say anything about actually expanding inventory or pricing inventory appropriately. Real inventory is low and it's falling. All right, now the other statistic I give every month is the back on market statistic. And the back on market statistic, that's properties that have gone into contract. And for some reason, instead of going through the escrow process and closing, they're falling out of escrow, they're falling out of contract, Right? It could be bad appraisals, it could be bad inspections, it could be bad due diligence processes. We've got a property that we just put into contract that we've had to fight tooth and nail over the due diligence process because the listing agent's transaction coordinator decided that she was just going to be super helpful to the seller and maybe save her a few dollars, and it almost killed the deal. So fortunately, I understood what was going on, and I pushed back really harshly on that, and we were able to save the deal. It looks like it's still pending, but agents have to really know what's going on in the market to be able to overcome this issue. There's friction all over the place. And we always expect some number of contracts will fail because people lose their job or people move or things like that. But those numbers should be in the low to mid single digits. Where are we? Single family resale failed contracts. 912. And by the way, I say failed contracts. This is actually back on market. That's a failed contract where the listing came back into the market. It does not include failed contracts that did not relist, right? So this is an undercount. Don't know how big the discrepancy is, but it's an undercount. This is not an overcount. This is a conservative number. The gap is probably pretty small, but it's real. But the number that fell out of contract that came back in, 912 single family, that's 32.9% of contracts for single family failed. And that went back in the market, right? Maybe a little bit more for failed, including those that did not go back in the market. That's a third of contracts, 32.9%, that's 33%. A third of single family resale contracts failed. What about condos? 122 of those failed. That's 33.5% of condo contracts failed. Townhomes, 84. That's 26.5% of townhome contracts failed and came back into the market. These are disgustingly bad numbers, right? Right? I mean, invert the number for a second and think about that. 32.9% of single family contracts failed, right? So if we say that an A plus rating is 100% of contracts close, we take out 32.9% of that leaves us with what, 67.1% of contracts for single family closed. 67.1%. That's a D, right? This is impacting buyers, it's impacting sellers. Frankly, it's impacting everyone in the transaction space. These are really, really bad numbers, right? Maybe I should report these numbers so that they're more understandable as how much failure there is. There's only 67% of contracts that are actually valid, right, going to close contracts. Listen, these are really horrible numbers. You need to talk to your real estate agent and find out why these numbers are so bad, what they're doing to protect you, whether you're a buyer or a seller, from experiencing one of these D ratings, right? Horrible, horrible information about what's actually taking place in the market. That's why I'm saying to you, the real estate market in Las Vegas, and by the way, these numbers on back on market contract failure numbers have been elevated since October of 2020 when I started looking at them. And elevated, I mean 3-4 times what these numbers should actually be, right? Really bad. So talk to your agent, find out why, find out what they're doing to protect you, find out what the proactive issues are that they take care of to help ensure the contract is going to be more stable prospectively and to help figure out how to deal with things reactively when that's necessary. There are always going to be contracts that fail, right? That happens for a variety of reasons, but those numbers should be small. And at the Chong Miller Group, the numbers that we've got, they're small, right? I haven't done the actual calculation, but they're less than 5% of all the transactions that we do on a yearly basis or over the course of the entire time that Chong Miller Group has been in existence. We don't experience this kind of problem, which means that a lot of other agents are experiencing even worse of this kind of problem because our contracts are durable and they're stable and they're working. So, okay, I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people build wealth through real estate. We help people buy and sell homes here in the Las Vegas Valley. If you have questions, please email them, put up comments. I'll respond to your comments gladly. And smash the like button and the notification bell and all those kinds of things that you can do on YouTube. And I will look forward to seeing you in the next video. Thank you.